Hi, this is Gordon. At the request of one of my friends, I will be doing a 10-minute lecture on how to report business taxes in TurboTax. So let's talk about business taxes in general. The business tax owed is calculated from the business income minus the expenses that are deductible during the course of running this business. That gets you the taxable income, which is then multiplied by your tax rate. Here we're assuming that the individual is filing on Form 1040 Schedule C, meaning that they are going to be a sole proprietor. They have not incorporated, they are not using a partnership, they are not using a C Corp or an S Corp. They are simply doing business in their own name, and they are going to report it as part of their individual income tax. This individual has been selling books, and for the calendar year of 2019, they've sold $600. Well, they've sold a large amount of books, but the percentage royalties that they get from those book sales is $600. That's the cash they receive in pocket. This individual has also paid a publisher $500 to get those books out to market, and has paid Google AdSense $100 to advertise the books. So we're looking at income of $600 and deductible expenses to the publisher and for marketing of $600. 600 minus 600 is $0. So no matter what this individual's tax rate is, that individual would owe $0 for this business. Now let's take a look at how this actually works in TurboTax. You need the version Home and Business because none of the other versions of TurboTax allow you to report and enter information into Schedule C. So let's go immediately to rental properties and royalties, and I'll talk through how to report rental income from residential property. So the first thing you want to enter is whether or not you're a real estate professional. Unless you're a real estate agent or someone in that industry, the answer would be no. So for me and my rental, the answer would be no. The next thing is to list all the rental properties you have using this Add Another Rental button. And so if you had 5 rental properties or 20 rental properties like John Sonmez, you would have a long list here, and then you would enter information individually for each property. So you would have first the property profile, and this is just demographic information about the property so that TurboTax can create a unique list entry, and if you have multiple ones, keep them separated. And then you select what kind of rental it is, and again, demographic information. You should be renting at fair rental value, and the way to find that out is to simply look on Craigslist, and for that same type of rental, for example, studio or 1 bedroom in that same area, what are other rentals going as? And if yours is comparable, click yes. Answer this information. And go ahead and continue going manually. One question is if you actively participate. So if you are the individual who is putting out the ads, walking the tenants, potential tenants through the property, signing the contracts, and on call when the tenants need help with broken plumbing or something, then you are an active participant, and that gives you some favorable tax treatment. So click yes if that's the case. Now, did you pay someone and issue them a Form 1099 miscellaneous? That is likely not the case, but we can report these sorts of payments in the expenses section, which has not come yet. We're still in the demographic section, and we're going to enter the information ourselves. There are usually disasters going on in the country at any given time, and so if you're part of those, you can have favorable tax treatment. Usually, it's never applied to me. So now we're going to go into rental income and talk about how much we received from the tenant. And that'll be the information there, very quick. Now we're going to go into expenses, and you should treat this as just a gigantic list, even though it's going to be 3 different screens here. The first screen, if you pay for advertising, if you pay for non-auto travel, like you have to fly back to your property and inspect it, then you can deduct that. You can deduct advertising. You can deduct a maid service. You can deduct cleaning for after the tenant leaves and you need to clean it for the next tenant. You can deduct cleaning materials. If you hire anyone on commission for your business of renting out properties, you can deduct that. If you are renting out a home and you have homeowners insurance, then you can deduct the premium on the homeowner's insurance. If you incur professional fees, such as hiring an attorney, an accountant, with regard to this sort of business, then you would also include that there. Now, just think of this again as continuing on that list of deductible expenses. If you hire a management company to oversee the property and to put out ads whenever a tenant leaves, then you enter this here. If you have a unit in a condo or an apartment in a larger building, then they're going to charge management fees, and you would enter how much you pay there. If you pay for repairs from an electrician, from a plumber, supplies would be anything from toilet paper to light bulbs. That's all deductible. Real estate taxes are usually charged by the local government, and for me they come twice a year, and that's deductible every year. For your rental business, other taxes, I don't know what those might be, but you can deduct them. Utilities such as internet, phone, television, all deductible. So then if you have a mortgage on the property, that is, you don't own it outright by paying off the mortgage or by paying cash initially, then you are able to deduct the mortgage interest for purchasing that property in the first place, and you would list the various lenders and the interest paid. There could be other interest you pay on the property, enter that here, and refinancing. And then this is the third screen that continues that list of deductible expenses, where you can enter additional expenses incurred during your running of this rental business. Now, after expenses, we have an additional deduction for depreciation. Depreciation is the idea that you buy a house and every subsequent year it's going to be worth less because it gets older. And so you're allowed to deduct a portion of that house's value over a specific period of time against how much income you're getting from renting out that house. So let's take a look at an example. You would answer questions like this, and also, did you make capital improvements to the house? For examples of capital improvements are improvements that run with the land, as opposed to just buying an appliance that you can take out afterwards. So that was a very bad example. So buying a toaster is not a capital improvement, but buying something like a stove that would be installed there is a capital improvement. Putting in new cabinets, putting in a bathroom remodel, putting in new floors, those are improvements. Landscaping, getting the driveway refinished. So anything that stays with the real estate, you would want to report here because it increases the amount of depreciation deduction you can take in this year and future years. All right, so assuming you don't have any, we go on to this screen where, again, it's a list of all the properties, and we're going to figure out the depreciation for each one. What we're going to do is, for each one, we're going to report the date that this property was placed in service. So either when you purchased it to rent it out, or when you first started renting it out, because you weren't renting it out before, you report what kind of asset it is, residential real estate in this case, and then you report the cost basis, which is for how much you purchased this property. And then answer these basic questions. And what TurboTax will do is say, okay, for this type of asset, which is residential property, then we can depreciate it for almost 30 years, starting from the date that you turned it into residential rental property and over straight line. So you're getting basically a deduction of 1/30 of the purchase price of this property every year to reduce your amount of taxable income. And we're done with that. And the final screen, this vehicle expenses, is just a continuation of all of those previous screens where you have deductible expenses. Use of a vehicle is a deductible expense as well. So if you are driving around to meet potential tenants or to inspect your property, then you can report either the actual cost of maintaining that vehicle for that period of time you are doing it in your business, or you can estimate the mileage and take the whatever the mileage deduction is, 50 cents per mile or whatever, that changes every year. All right, and once you're done with this, you will have completed your very first rental property entry in TurboTax on your Schedule C of your Form 1040. Congratulations, and happy renting and happy filing.